Crypto is about to get its first real rulebook in the United States, and the biggest banks on Wall Street are doing everything in their power to kill it. The Senate Banking Committee will mark up the Clarity Act this Thursday, a sweeping bipartisan bill that would split oversight of digital assets between the Securities and Exchange Commission and the Commodity Futures Trading Commission. Under the bill, there would finally be a clear legal line between when a token is a security and when it is a commodity, a distinction the crypto industry has fought over in courtrooms and congressional hearings for years. Major banking lobbies are pushing back hard, arguing the legislation would allow crypto firms to operate outside the regulatory framework that traditional financial institutions are required to follow. The bill has support from both parties, but Thursday's markup will be the first real test of whether they can agree on the details. Whatever happens this Thursday could set the direction for how all digital assets are regulated in the United States for years to come. The company sitting on more Bitcoin than any corporation on Earth just made a promise no one expected: 30 BTC bought for every single one sold. Strategy, the firm formerly known as MicroStrategy, resumed Bitcoin purchases this week after a brief pause, adding $43 million worth of BTC to its treasury. CEO Michael Saylor announced what he is calling a never be a net seller policy, pledging to maintain a 30-to-1 buy-to-sell ratio going forward. The pledge means that even when the firm needs to sell Bitcoin for operational reasons, it will immediately buy back 30 times that amount. Strategy has been the most aggressive corporate buyer of Bitcoin since 2020, and this latest move signals that the accumulation strategy is only accelerating. The $43 million purchase came after the company paused buying last week, raising brief concerns about whether the firm was pulling back. For markets, the message from the biggest corporate Bitcoin holder could not be clearer: they are not slowing down. The one number the Federal Reserve watches more than any other just moved in the wrong direction, and the entire crypto market is about to feel it. U.S. inflation is on track to hit its highest level in 3 years, driven by surging gasoline prices linked to the ongoing conflict with Iran. Friday's jobs report only made things worse, showing an economy still running hot enough to give the Fed zero room to cut interest rates. For crypto, this means the tight money environment that has kept institutional capital on the sidelines is not going away anytime soon. Lower interest rates have historically been a tailwind for risk assets like Bitcoin and Ethereum, but with inflation accelerating, that relief keeps getting pushed further out. Economists now warn that gasoline prices could climb even higher if the Iran situation escalates, which would make an already painful inflation picture significantly worse. The Fed's next meeting in June will be closely watched, but traders have already priced in no rate cut for at least 2 more quarters. Subscribe now.